Hello, hopefully you've had a chance to download the data so that we can prepare a bank reconciliation together. So this is what the data looks like. Go ahead and look for that file in the Chapter 8 resources. Let me first, before we put data in it, just kind of plot out for you the outline of a bank reconciliation. Alrighty, so bank reconciliation, of course, we have a 3-line header. So we start with the name of the company. We identify the type of report, bank reconciliation. Feel free to abbreviate that. And it's going to be a point in time. So let's just say it's December 31st, 2019. So that would be your 3-line header. Then you're going to separate this into 2 sides. This side's going to have all your bank information. So we'll go ahead and say bank balance, which is our starting point, because we want to make sure and compare the balance for both figures. The other side is our balance, because if you remember, that is what we are comparing here. We're comparing the bank's balance to our cash balance. So that's our first step in the report. Okay. And so we call it book balance, the balance according to our books. And whatever that is, I'll leave a little line for it so we'll fill it in later. Now, if the 2 balances are the same, then we don't have to prepare a reconciliation. A reconciliation is an explanation of differences. If the 2 balances are different, then we need to compare and continue on with this report. All right, so the first section is an add section. These are items that we're going to add to the respective balances. Common items that are added are those deposits in transit we talked about. Deposits in transit. So whatever that number is. Common items that we add under the book side are collection of notes, note receivable amounts. I wouldn't have dollar signs on everything. It's just so that you know that this is a dollar amount. But of course, it's just the first number of every column that gets the dollar sign. Other common items that are added to the book balance, interest earned. And of course, this would be communicated by the bank to the company in the form of credit memos that we were talking about earlier. I'll refresh our memory. We talked about credit memos being for items such as interest earned, like we just talked about. Alrighty, after we have those items, we're going to look at common items that are subtracted. So leave a space, less, or you could write deduct, either is fine. Common items that are subtracted from the bank side, those are those outstanding checks we talked about. Outstanding checks, fill that in. Common items that's subtracted from the book side, NSF checks, bank fees, whatever that is. So an NSF stands for a non-sufficient funds check. This is when a customer pays off their account, let's say. We go to deposit that customer check, and there's not enough funds in that customer's account to pay our amount owed. Okay, that's an NSF check. And then we'll total it up, and we'll say adjusted bank balance. And we'll compare that to our adjusted book balance. And hopefully, these amounts are the same. So that's the general outline for a bank reconciliation. You can see it all. Okay, I left a little bit of space because occasionally there are errors. We talked about the fact that most of the differences are timing differences. So everything you see on here is a timing difference that we talked about earlier. Timing differences being outstanding checks, outstanding deposits, outstanding checks, debit or credit memos. The other difference we have to account for, which is not a timing difference, but are simply errors. Those errors could occur on either side, right? So we could have an error here, here, here. Book side, deduct. It just depends on the type of error, which is what makes the errors so difficult, is because they can go anywhere. So you have to read what type of error it is. Who made the error? Was it the bank? Was it us? How did it impact our starting balance? Right? So the errors are the hardest. Everything else you can memorize because deposits in transit will always be added to the bank. You're not going to see it anywhere else. Outstanding checks will always be subtracted from the bank balance, right? These items will always be added to the book, and these are examples of what will be subtracted from book. Oops, every company is not going to have all of these, right? Maybe they'll have collection of NR, but they won't have bank fees, or they won't have NSF. That's fine. I just wanted to give you a comprehensive outline of what you might see in a bank reconciliation. Okay? With that being said, we can now go ahead and try our problem set that I've posted. If you want to try it on your own, go ahead and pause the video, and then we can resume here in a minute.